Welcome to the Foundry, where leaders are forged daily. I'm your host, George Roberts. Welcome back, entrepreneurs. Today we have Sam Wilson, founder of Bricken Investment Group. Welcome, Sam.
Hey, thanks, George, for having me on the show.
So today I'd like to start off a little differently. I know that you have a background in finance and you're definitely very focused on economics in general. I noticed when I interviewed with you, the gentleman on your hat happens to be one of my favorite economists. Maybe you can walk us through your background and tell us a little bit about your favorite economist.
Yeah, and I'll be honest here, George, and say I'm a little bit of a poser. I think this is Murray Rothbard, right?
All right. Yes, absolutely.
So I always say I'm not an intellectual in the sense that I love to just be in the trenches and do. And there are lots of people who are really smart that can take the things that I tend to feel. How do I put it? I feel them just kind of like it's a sense like you know it, but you can't find the words to put it into hey, this is why I know it, or explain it in very complex oftentimes terms. So Murray Rothbard, of course, is a free market libertarian economist. He's long dead, but Murray Rothbard, the Mises Institute, Ludwig von Mises. I mean, all of those people were people that really explained a lot of why people do what they do and what happens when government gets involved. And I don't think we have to look too much further than maybe 2020 and see what distortions that happen in the economy and with people, and why we all of a sudden can't find labor here in 2021. Go figure. When there's a plethora of jobs out there, you go, okay, these people had some very clear and tangible reasons for why these things are occurring, especially when large bureaucratic organizations get involved. And it's really just nice to know that there are people out there that think on a different term. I mean, economists aren't economists today, right? They're either talking heads that just repeat what they're told, and they treat GDP like it's something we can turn on with a faucet and turn off. We just turn up GDP. Well, no, there's actually real people that do real things on the ground level that make decisions, based upon what the government is actually doing, or they're, wherever their other people are doing. And the idea of free markets is a big deal to me. It's like everything we do, it's a free exchange. I have a product, you want to buy it, there's no coercion. If you want it, we trade, and off you go, and we're both made better for the transaction. Whereas, we're taught today that capitalism is bad and profit shouldn't be the first thing you do. And it's like, well, we only profit if people like what we produce. And if no one likes it, no one buys it, and I lose money. Duh, it's that simple. Sorry, I'm on a soapbox here, but I get really irritated when I do a daily real estate podcast called How to Scale Commercial Real Estate. And I hear a lot of people defending, we should just be more conscientious and not put profit first. I'm like, well, if my product sucks, then no one wants it. And that's the end of it. And I go out of business. Like, that's just very natural. So, that's why I kind of like people like that give the rest of us that are, grinding it out, a voice.
Yeah, I love it. And there's so much in there. I feel like we could have an entire podcast just talking about finance and economics.
Right.
But I'll just tell you my favorite quote from today. As of today, it's December 2nd, 2021. The biggest quote from yesterday's news, I believe, was Jerome Powell saying that I think we should retire the term transitory, right? And if you were taking a look at the bond markets, all of a sudden, and he's talking about inflation, of course,
right.
The bond markets took a tumble, and it's like, well, now wait a second. Jerome Powell says that inflation is here to stay. Now I believe it's here to stay. And I'm thinking, like, I can't believe anybody's reacting to this, because if you've been paying attention, I'll just tell you a quick personal story. A friend of mine just yesterday, he sold his Hummer. He put 28,000 miles on this thing, sold it for $1,000 more than he bought it. I mean, tell me that things aren't crazy right now. You just can't pay people not to work, have less production and more money running around, and say that there's not going to be some inflation somewhere in the economy.
Well, for sure. I always equate it to going to an auction, right? Let's say there's 20 guys at an auction and there's one item in the middle and everybody has $20 in their pocket, right? And then right in the middle of the auction, I come around and I put an extra $100 bill in everybody's bucket. Well, what happens to the item in the middle? Well, suddenly the item in the middle, everybody's like, well, shoot, I did have $20, but now I've got 120. Well, I'll go 80, right? For the same exact item. And for no other fundamental has changed other than the fact that there's more dollars in their bucket. And it's like, well, this is exactly what's going to happen to everything else in the economy. I mean, we flooded it with trillions of dollars. Where does that go? Any hard asset, anything that you want to buy is going to go up. And being prepared for that. I mean, we can get into this in a little bit, but I've got my hands in a business that, I mean, we can reprice in seconds. And it's like, that's important to me. Real estate, somewhat, not entirely, you know, because you're usually on longer leases and things like that, but at least you're tied only to a 12-month, quote, transitory inflation period. Like, okay, we'll reroute all the leases in 12 months when inflation's hit 20%. Okay, fine, no problem. But that's how I want to position myself around that, right?
Yeah, awesome. And I love your approach. It strikes me as very Austrian. You're doing the thought experiment right there. There's a lot of common sense in there that I think sometimes modern economists are forgetting and would do well to remember the fundamentals and again just the basic common sense of things.
Right.
But in any event, we should probably merge on over a little closer to real estate. And before we do that, though, this is a podcast that does honor entrepreneurs. So I know that you come from a very entrepreneurial family, and you also have other entrepreneurial ventures outside of multifamily. I'm sorry, exactly. You're in multiple asset classes. So maybe first of all, we can start with that. So what asset classes are you invested in? And then we'll go into your other entrepreneurial ventures.
So I'm a limited partner in self-storage ground up, in RV parks, and in multifamily. I am a general partner in multifamily. I own some land projects that were going into development, but that strategy has changed. And I intend on buying more land. That's one of the things that really kind of fires me up, is owning raw dirt. And let's see what else. Oh, and also a general partner in some other storage facilities, just standard, you know, regular household storage facilities. And I think currently I own some single family residences, but those are kind of legacy assets. I do not actively buy or participate in the single family market anymore for a lot of reasons, but those are kind of some of the things that I have going on right now.
Awesome. So that's definitely a very diverse group of investments, and I think obviously very smart to be able to spread it around a little bit. Being an LP is really a great thing, and I feel like it's underrated. People who are on the GP side, sometimes they only want to talk about that, and I just love being a limited partner. I'm going to go into a private equity deal. Can't really talk about details, but it's something. It's real estate related. But again, it's different enough from the sort of syndications that I'm exposed to, saturated with every day, that I'm excited. You know, there's no reason as a limited partner that you need to be able to understand absolutely everything. Like, you could run the investment. You just need to be able to recognize a good deal and that the numbers make sense.
Right. Yep, you got it, man. Yeah, we always you're spot on. My 10-year goal is to be solely a limited partner. And I don't say that without, you know, I'm not ashamed of that. Like, some people's goal is to build a, you know, hey, I want to have, you know, whatever it is, $2 billion in assets under management in the next 6 years. It's like, yeah, I could get there, but I also want to find an exit from that. Being a limited partner is a beautiful thing. I'm an LP and like I said, a variety of projects, and they're all doing really well. Of course, everything in real estate is doing really well right now. And they're doing really well. And it's like, wait, I've got deals right now. They're going to double my money in like 18 months. And it's like, okay, so I wrote you a check, you double my money, and I get a check, and I collect the income every month along the way. Okay. So what's wrong with that? Oh, and by the way, did I tell you my phone never rang and I never actually did anything other than give you the money? You know, there's three things you got to pick. This is and to kind of counter your point there that the deal has to make sense. I say the deal has to make sense. That's the third leg of the stool. You know, the first and most important leg is the sponsor, of course, right? Vet your sponsor. That's what you spend the most time doing, is vetting your sponsor. Second thing you do is you vet the market the sponsor's in, because you can have a great sponsor in a crappy market and they can only do so much. The third thing you do is vet the deal. Like the deal's the last piece of the equation. Of course, you spend time on all three of those, but that's what I always say is about the sponsor first, market second, and deal third.
That's absolutely great advice, and definitely something you don't want to skip. Steps 1 and 2, very
Right.
important. Well, let's move on to some of your other entrepreneurial ventures. Let's warm up to the multifamily real estate. So tell us some of the things that you're doing outside of, or tell us about the construction too. I think that's, to me, that's just fascinating because it's like an order of magnitude more complicated than taking on an existing operation or even a value add.
See, I think it's not like, I've done so much remodel work through the single family side. I used to own a flooring company. It was a family business. I bought out part of it when I was 25. I sold when I was 30. But even since I was a little kid, I was involved in the trades, right? And I went to job sites with dad when I was, less than 10 years old. Spent time in those environments, and watching rehabs and remodel projects and things go down. There's just so many moving pieces. There's not the predictability of it. There's not every project is different. Every house is different. And one of the things, you end up managing enough of those projects. I think ground up construction is a lot easier. Here's the plans. Building a house from scratch is easier by far. Like, oh, your plumber comes in and they've got they've got the plumbing schematic, and that's how they're gonna lay it out. Like, there's not as many questions, right, along the way. You've got your finishes, you got your trim, you got your stuff already picked out ahead of time, probably by your architect or your interior designer. Man, or if on the case of commercial construction, it's even easier than that. I mean, it's once the plans are laid and the permits are pulled, it just seems like an easier machine to manage. I don't love having grown up in the construction industry and the trades. I no longer love it. I don't want to be involved, especially on the value add rehab side of things. I don't want to be involved in that anymore. Like, I called running the trades just running adult daycare, right? It's the number of guys that are tradesmen or tradeswomen that just, I mean, oh man, it's hurting cats, and it just wears on you. So I'm personally, and there's people that love it. I mean, there's people that really, just excites them in the morning to get up and go, man, we're gonna go turn this house into something awesome, or turn this commercial building into something gorgeous. Like, okay, cool, good on you. Go knock yourself out. I don't want anything to do with it. So, and that's the beauty of growing your business and being able to choose now what you want to do.
I love it. And I'm also involved in construction, so I love those stories. I could probably tell you some stories about adult daycare. It's definitely an interesting group, but those are the people that get it done. They're the people
Sure.
who build the structures we live and work in. But it's pretty interesting, especially in a tight labor market. But
Yes.
one thing that I think comes out of your story, you didn't really amplify it, is that people either go into the ground up end or into the rehab.
Right.
And I don't really know people that tend to be very successful that are dividing their time between the two. They're very different approaches.
Yes, agreed, agreed. Yeah, and I again, my ground up experience is limited, but it's certainly if I were to pick, if you said, "Hey, you have to be involved in construction," I would pick ground up, hands down.
Love it, love it, love it. Well, okay. How about this? You also mentioned to me before the show that you have another venture that has some pretty awesome returns. What are you doing?
Yeah, so one of the things I accidentally bought a few years ago was a laundromat. You might say, okay, a laundromat. Like, everybody knows about laundromats. They're typically in lower socioeconomic areas. They're usually run down, dingy, like you feel like you're going to get stabbed by a dirty needle somewhere when you're just trying to get your clothes clean and get back out. And it's certainly the one I bought was it fit all of those bills, like lights hanging down from the ceiling. Place was disgusting. I walked in it and I just said, "This looks like a regular old rehab project." I didn't think anything of it. I said, "Okay, I'll buy it. We'll turn this thing around and make some money on it. No big deal." It's actually like, now that I'm into it, I'm like, wait, there's a lot of merit to this industry. It's a very fragmented industry. It's mostly mom and pop. It is the returns are exceptional. So we put a bunch of money into it. Made a beautiful laundromat, made it, redid everything, all new equipment. We put, like, I don't know, 400 and something $1,000 into this laundromat. And I mean, the cash on cash returns, and of that 400, I put about 100 in myself of just of my own cash, and then the rest was debt financing. And we had 100% return of capital within 1 year. So, I mean, that's crazy, right? And so from this point forward, it's like, wait, I've got no money in this thing, and it's still throwing off 6 figures a year. It's just beautiful. It's a great little, I mean, it's a great little neighborhood resource. It's a community center. And again, if you're just looking for cash on cash returns, it's crazy. Unlike real estate, your equity multiple, if I ever wanted to sell, it's not going to be there, right? You're not trading laundromats at a 5 cap. You might be trading laundromats at a 3x equity multiple. So there's still money to be made, but it's not or excuse me, a 3x, in NOI. So there's money to be made, but there's not the upside that there is necessarily if you, increase NOI on a multifamily project or something like that. But certainly as a cash flow generating machine, it's like, wait, I've got one of these. Why don't I own 10 of these? This is brilliant.
Yeah, I love it. And it's fascinating to me when you go into these fragmented industries and you are able to get that sort of cash on cash return. Whenever I invest in anything, first thing I like to ask myself is like, hey, why isn't Warren Buffett doing this? And I think you should have a good answer to it. And somebody like that is not going to be able to invest in one laundromat. Somebody that has a tenth of his net worth is not going to be able to do that. But to somebody like you or I, that looks like an incredible deal. And, you get 10 of those, and I'm sure that you've got to be in a much better place.
Oh.
Yeah. Especially like you said, when you see those industries where you're selling at a low, multiple of the NOI, you got those super high cap rates. Well, the other side of the coin is, hey, maybe you're not able to get that huge appreciation, but wow, cash on cash is king.
Right. Absolutely. Yeah, you're absolutely right. And the other thing that I think is really fascinating about this, going back to the inflation conversation from earlier, is that this is all, of course, everything's gone digital. We still take cash, and there's still coin operated laundry. But I mean, we all the way down to like all of our machines can be started with an app, right? You can go in and you sign in with an app, and you get your numbers on your machine, you sign, but I can reprice it like a gas station. So, oh crap, look, inflation's gone through the roof. Thank you very much, Federal Reserve. And now what used to take $8 to use my machines, now 16. And I can change that, right? I can have it changed before this conversation is over on every machine in the store. It's like I said, it's a gas station. You just go, okay, everything just doubled in price. Oh, well. And I can keep up with inflation very, very handily, whereas other maybe industries, maybe your longer term contract real estate, again, we talked about earlier, not so much, might be locked into a 12-month lease with a tenant. So, all right, so if it's whatever, they're paying $1,000 a month, you got 12 months until we can reprice that lease. Still not awful, but still not instantaneous like I can do right now, which is, pretty spectacular in a quote unquote transitory inflationary environment.
Yeah, amazing. And I just love everything you're telling me about the laundromat business. The fact that it's total cash, that's going to turn a lot of people off, right?
Yeah.
There's basically two, I would say, in the multifamily business, basically two approaches. Some people like the mom and pop because there's a lot of meat on the bone without such large economies of scale. On the other hand, you can go for the 100 and up, where you're going to get great financials, and you're not getting any discount there because it's going to be fully exposed to the market through a broker. And there's no question. Well, there's some question. You got to do a lot of due diligence, but there's nowhere near the number of questions that you have to ask when you're handed financials on napkins.
Right. So. Right. If there's any financials at all, which I think when we bought this laundromat, there was none. It's just like I was basically doing a what was functioning equipment purchase, and otherwise assuming the lease, and which is fine. I was happy.
Yeah, I love it. Which, when you apply that same old question, is like, why am I buying this? Why isn't some other fish? If the only answer is because a bigger fish can't deal with finances on napkin, then okay, great. You know what? I can deal with that, and I'm going to take the cash flow.
Right. 100%. Yeah. And it's one of those things that this is a scalable model. I think that's the other important part of this equation, is that what we're doing is scalable. At this point, I could probably add 3 or 4 more and not really change a whole lot about what we do. and that's great. Like again, just it's scalable. So, and that's the other important piece of the business. It is mom and pop, but it's also mom and pop with upside.
Love it. Just love it, love it, love it. And so then let's move into your markets. I understand you are living in Memphis, Tennessee. It's a place that you have invested in the past, maybe a few leftover investments from an earlier era, but you've moved on. Tell us where you're investing now and why.
Yeah, mostly in the Carolinas, and it's a couple reasons. The Carolinas, the Southeast in general, is great. I avoid Memphis. It's just a place where you gotta have your ducks in a row, and it's not that it's a bad place to be, but there's just a different clientele and a different approach you have to take to dealing with tenants and other and I just got tired, to be honest with you. And so I don't want to deal with that. I don't, there's some demographic and some socioeconomic reasons why it doesn't make sense for me to be plugging in here anymore. Though there are lots of people, I've got lots of friends who are making great money here in Memphis and doing great things. So good on them. That's their choice. Again, taking my 10-year goal into play, I want to be an LP, right? I'm already bald, so I have no more hair to lose. I don't need to add more stress to my life. And so picking the Southeast, it was really a matter of just simplicity, in the sense that what I do on the commercial real estate side when it comes to multifamily is that I've got a couple of key operating partners that I work right alongside. And so when they bring a deal to me and say, hey, I've got this large deal, do you want to be part of it and help us take it down? I say yes. And that's just where we've landed as the Southeast. Great market dynamics. Anywhere in the Carolinas is great. South Carolina in particular is great. They tend to be more landlord friendly. Even the North Carolina, though we own assets in both. And so, those are compelling reasons to be there. I've got teams on the ground. I've got people I know, like, and trust that bring deals to me, and we can just wash, rinse, repeat fairly simply. And so that's really the strategic reasons why I'm in the Carolinas.
Love it. Well, I love that Sun Belt. I particularly love Central Florida. So that's
Yeah.
my stomping grounds. I'd love to expand beyond that, but also have an asset in East Tennessee. And I know I have a lot of Tennessee listeners. So maybe if you could break down Tennessee a little bit. So for those that don't know, there are 3 stars on the flag because you've got essentially 3 sections.
Mhm.
The most, well, the one that's just taken off like crazy is the central section in Nashville.
Right.
And maybe you could tell us a little bit more. So your region, of course, is west. You're in Memphis, and then you also have East Tennessee as well.
Yeah, and of course it's I mean, Tennessee's a wide state. I'm trying to remember, do we touch 8 or 9 other states? It's at least
Wow.
8. So, I mean, it's a wide state. I mean, it's 350, 400 miles. No, it's more than that. Yeah, it's more than that. It's probably 450, from side to side. So it's a wide state. And with that, you've got the Smokies in the east, which is great. That's a great place to be. I mean, I know lots of people there on the real estate side, just crushing it in the Smokies with short-term rentals, RV parks, even buying campgrounds. I mean, stuff like that does really well. And I'm giving you the real estate version of Tennessee, but does really well, in the East. There's small multifamily, lots of opportunity in small multifamily in East Tennessee. If you want to buy 20, 30, 40 units at a time, there's a lot of that kind of legacy product that is really available. Middle Tennessee, of course, is a little bit different. Nashville is kind of the up and coming star. Lots of companies moving there. Tennessee has which is going back to economics, has a quote unquote, we don't have an income tax, which I think is hilarious when people tell me that, because we truly do have an income tax. For those who aren't aware, there's a franchise and excise tax in Tennessee that you pay at the corporate level. So, other states like Indiana don't have that. So if you're going to pay a 6% F&E tax here at the corporate level, that's just 6% I can't give to my employees. So you're getting taxed, your employees here in Tennessee, whether you know it or not. You just don't see it coming off your pay stub. It's that 6% we can't pay you. So that's pretty hilarious. But sorry, I digress. So Middle Tennessee, yeah, up and coming, and things are doing great. I mean, that's off the charts. That's off the charts. You've got good manufacturing in Middle Tennessee. Lots of business moving here. Yeah, that place is booming. Nashville, of course, is the Star Market there, and then you head to West Tennessee, and we're out here in the Delta. I mean, the Delta is as different from the Smokies. It's like being out in the plains of the eastern plains of Colorado. You're like, wait, where are the Rockies again? You have no idea. You had 100 miles west. You're like, oh man, this is a very different environment. Very different environment. And that's the same for us, which is great. But here, I mean, gosh, you come to Memphis, and Memphis is the cash flow. I mean, cash flow capital for people investing, and still is, even though prices have risen significantly, still is. I mean, the number of people that come here just to buy single family rentals is it's still a very, very attractive market on that front. And so, yeah, I mean, people come here to buy and hold long-term real estate. So whether it's single family, multifamily, whatever it is, and that's kind of the breakdown of the state.
Yeah, I love it. And definitely a very wide state. I remember when I drove down to East Tennessee from Michigan, I think that was 8.5 hours.
Mm-hmm.
And my wife said, hey, how long would it take to reach our friend out towards Memphis? And I looked on Google Maps, and it's 5.5 hours.
Well, yeah.
I'm feeling like, whoa. I mean, I'd almost be driving as far to go to see her as I would be to get most of the way back home. I'd be somewhere in Ohio.
Right. Right. Yeah, which is pretty hilarious. Yeah, if I'm going to Indianapolis, I go through Arkansas and Missouri, which is like, wait, what? Yeah, because we're at the southwestern corner of the state, and you go up through Arkansas, you go through Missouri and Illinois before you get to Indianapolis. I mean, it's like, this doesn't make any sense. Well, people don't think how far west this state goes.
Awesome. Well, I just love Tennessee. I mean, you've got Elvis out there in West Tennessee, so that's a lot of great things. You got the Mississippi, and just a really cool and exciting place.
For sure.
Well, let's see. Let's move on a little bit here. I'll ask one more off the wall question.
Yep.
So I understand I've had my own journey from being a total introvert to being an apparent extrovert. So what about you? Tell us about your journey. I mean, you have a daily podcast.
I do.
So that's not something I would expect from someone who describes themselves as a bit of an introvert.
For sure. No, it is. And introverts, I think get a bad rap. Like, it's like we don't like to talk to people, or, don't want to be around people, or that we're completely socially awkward, which I probably am and just don't know it. But the truth is that, I think what separates an introvert is, do we gain energy from interactions with other people, right? Like my wife, man, the more people that she's around, the more alive she becomes, and the more energy she has. Like for me, going out and having conversations all day long, I want to go home and take a nap. Like, oh my gosh, I'm just tired. It just takes energy out of you, which is fine. No big deal either way. But it is harder, and it is more of a discipline, right? To go, okay, I'm going to go out. We're going to do a daily podcast. And we just passed episode 365 actually this week, which was great. So it's been going for a year, which is kind of a notch in my belt, which is fun. And I have no plans on slowing down. But yeah, running a daily real estate podcast, it's great. It's actually probably been one of the best things for my business. And I don't, no matter what industry you're in, I would highly recommend, getting involved in some capacity where you can do an interview style podcast with somebody else in your industry. It gives you great contacts. It builds your network incredibly fast. And, again, we've taken down deals this year simply because of a podcast, which is, wild and crazy to think about, but it's the reality of it. So yeah, 100% would recommend it. And yes, it is a discipline. And yes, it does take considerable. I think I've got 6 interviews after this one today, and it's like, okay, buckle down. Here we go. We're going to work. But that's just the way it is.
Well, let's talk a little bit more about that podcast. And by the way, congratulations. That is a huge milestone.
Thanks.
You will be episode 38 and probably come out, if it's not the last episode of the year, it'll be the first in January.
Oh, fun.
And that's just huge. I know what doing 38 episodes has done for me. And it really is an amazing conversation. If nothing else, if we were going to chat about real estate for an hour, we wouldn't go as deep, I find, as me asking you questions, and just, you literally get the opportunity to put the focus on the other person, and you really learn a person and where they are and what they have to offer, and how you might partner in a way that I feel these 30-minute, 1 hour intro calls just never do.
Correct. 100%. Yeah. I mean, and yeah, you said it very well. I won't add anything to that.
Awesome. Just awesome. Yeah. And I love that you are encouraging people to go out there. Cause I mean, do we have 2 billion podcasts yet?
I don't think
It's
so.
pretty crazy. There are a lot of podcasts. Obviously some people must be running 5 or 6,
Yeah,
but
there's a
it's
lot of podcasts, but I think for every podcast, there's like 10,000 YouTube videos or something crazy. I mean, it's the number. I mean, people say, "Gosh, the space is overrun. The space is overrun." Yeah, maybe, but not quite as overrun as you think it might be. It's like saying real estate's overbought. Well, maybe. I
what
mean,
yeah, what is less overbought? Or I'm sorry,
right,
what is more overbought than real estate?
correct.
Or everything is more. Yeah, sorry.
Yeah,
I started a debate with my
lots of room there. I think lots of runway left in the podcasting space.
Yeah, absolutely. And then just to merge from your podcast to scaling. So your podcast is literally titled the How to Scale in Real Estate podcast. And one of the things we haven't talked about yet is how you went from being a single family home investor to your current multifamily enterprise. So tell us about some of the maybe some of the hurdles that you crossed and maybe some of the things you've had to change or grow to reach where you're at today.
Yeah, the quick journey is got tired of doing single family for all the reasons we talked about earlier, just on the contracting side, and also it's the easiest point of entry, right? And whatever you do, I think you want to look to find ways to not be just one more in the herd doing the same thing that everybody else is. So when everybody else is zigging, you want to be zagging, going okay. And so in 2018, I was looking around. I'm like, gosh, I'm competing with novices in real estate. This is frustrating for me. Like I want to be the guy that has positioned himself such that I'm not competing with everybody else in the entry level real estate game. And so I wanted to get out of single family. I also did not do a good job of figuring out how to scale it. I know people have, and that's great, but I couldn't get the systems and the processes down, and probably still can't to this day. I don't know, there's something wrong in my own head or what, but it just every rehab project was different, and I just got frustrated. So margins got tight. The competition went up, the love for it went down, and it was like, all right, I'm out. I want to find my next asset class. I got involved in parking lots and parking garages for a couple of years up until 2020, and then that industry really just got hammered with COVID. Unexpected, but I mean, who was going to ball games night and weekend, bar traffic, who was going, I mean, even parking lots that service things like jails. I mean, those even, became sparse non-income producing assets. And so that industry just kind of got crushed and pivoted from there, and started looking at other assets and said, gosh, I love storage and I love multifamily. And so then partnering up and finding good operators and good people to work alongside was really the next step. And there's still opportunity there. Yes, that is overbought. Yes, it is competitive, but there's still stuff out there that is worth buying. It just takes a lot longer to find.
Yeah, awesome journey. Absolutely amazing. And I feel like with 6 interviews on the docket today, better set you loose so you can get onto that. But I want to thank you for an amazing interview, totally different than anybody that I've interviewed yet. I think I hardly even touched my ordinary boilerplate questions because you just had so much to say about entrepreneurship and finance and just absolutely blown away. I want to thank you, Sam, for coming on our show today.
Thank you, George, for having me. The pleasure was all mine.